Okay, good morning, everybody. It is 6:30 in the morning, 3 hours before the open of Wall Street, and we gather here today to get our macro on. Let's do that. Welcome to QuantBox Live. Let me bring up the site. QuantBox Live, where we uncover the best fundamental opportunities across the global markets. S&P 500, FTSE DAX, gold, oil, we got it all. Currencies, commodities. Love it. My name is Wayne McDonald. I'm the founder of QuantBox. I'm also a Harvard educated economist. I'm a trend trader. So every trend is based on macroeconomic fundamentals, and that's why this information is so important. If you're watching this on YouTube, it's probably 11 o'clock in the morning, and we've already done our work. Like I said, it's 6:30. So if you want to attend these lives or watch the recording much earlier, why don't you join QuantBox? You can try it, take a trial, less than $8. Yeah, less than $8. And look how pretty it is. So pretty. So, anyways, take a go to quantbox.co and take a trial. With that being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, yesterday was the 26th. Wait, it's the wait, isn't it the 28th? Is it Wednesday? I don't even know what day it is. Oh, yeah, that's right. Yeah, that's right. I didn't do one yesterday. It was, oh my God, you should hear the story. Anyway, so it's Wednesday the 28th, and that should be up there by 7 o'clock. We should be done, and this should be uploaded for those that can't attend live. So happy Wednesday, by the way. So let's get into the Google Cloud. Change it to the associated email. So these are all the different, Gmail accounts where I have, right? So you have to have the right Gmail account associated with QuantBox because QuantBox talks to the Google Cloud, and Google Cloud will only let you in with the Gmail account. So you have to have the right Gmail, right? So, anyways, it's all about talking. It's just talking to the database. So you have to identify yourself properly. All right. Anywho, loading. And by the way, if you're like, I am logged into the right Gmail account, well, you check in the your browser. So check that. And so here's all the different things I could be logged into. And if that is still correct, make sure you're using Chrome. And if that's still correct and won't let you in, open a new browser, a new Chrome browser, and try that. It's just with all the cookies and your ad blockers and all that kind of stuff, you're probably blocking Google. Okay, so turn your ad blockers off. Anywho, here we are. Very pretty, very pretty, very pretty. Not a lot has changed. All these trends seem to be in place. Yep. Swissy strong relative to Aussie. CAD strong relative to Aussie. Strong relative to Aussie, and then you go through all the kind of Kiwi stuff, right? So Kiwi and Aussie seem to be the weakest, and then on the flip side, you can see Swissy is quite strong, dollar's quite strong, euro is quite strong relative. So those trends have been in place for a while, and you've probably have been enjoying them. Let's take a big look at that and some of the one strategy that you can be using QuantBox for is finding things that are neutral, but you expect to turn bullish or bearish. Okay. I don't want to do that today, but that's one way you could use it. Let's take a look at the big scatter plot. Are you guys using the big scatter plot? Yeah. It's a big improvement. Yep. Good. Everybody happy? Nice. I like it. In particular, I always go full screen, right? And so I designed it to be a full screen tool. So it just fits perfectly. Yeah. Noise. And also, I like how we can turn these on and off much more quickly. I like that too. So big thumbs up for us. All right. So whoa, look at that. Okay. Nikkei has been down for a while, but it's been in an uptrend, right? So we know it's an uptrend because It's way to the right. So, right, look at the score. The bottom, all right, let's do this just quickly. If you look at the score at the bottom, okay, what it's saying is everything to the right has a big score on QuantBox. So no matter what happens, when you look at something up to the right, these are all things that were expected to be up. Okay, all of these things were expected to be up, and we know that because of the right. The more right they are, the higher the score they have in QuantBox. Okay, so everything to the right you would expect to be up. Now, some of these are not up, so that's why we know everything in the lower blue quadrant has a high score, but actually based on price is down, right? These are down. So those are out of position, but everything up here is well into position because not only is it to the right, but it's high, right? So now the high part is what actually happened. Everything above the 0% has gone up today, recently. And everything below that has gone down today. So anyways, everything down here fell and it was expected to fall because it's to the left and it has a negative score. Everything up here is up and to the right. So everything the upper and the righter, the better. So anyway, so you can see Nikkei is expected to go up based on its score somewhere between 7 and 8, and it did go up. It's up over 2%. Wow. Okay. So, anyways, that's a big, big win. That's sort of a home run. And then typically from that, we end up buying yen pairs, and they haven't performed at all. Right? They haven't performed. So, there's one of two things: they haven't gone up yet, or something truly has changed, right? To break this correlation of Japanese stock market up, yen pairs up. But I don't know. Trends don't change that often. So maybe these are just laggers. Cool. So then that's how you'd probably want to look at this. And then you go look at your yen pairs and find out the one that you want to buy. Right. So we can pick on one here, euro yen, and it's showing more of a turn here. Right. More of a turn may be coming. So if you're looking at this as a sell, then you want to look at your chart and you see right away the trend is strong to the upside. So that's it. Even though you might think sell, you don't just sell it. You look at it and well, you want your technicals to line up. Anything else going on here? Okay, neutral. Okay, kiwi maybe a buy. Okay. One of the things, of course, that it's looking at is the seasonality here, huh? So May, June, and then okay. So that's what's interesting, and that's why you want to look at Nikkei still going up. But will the yen pairs continue to go up? And you're like, well, somewhere between July and August, very often these yen pairs change, right? Um, so someone might be trying to ride the upward trend. Okay, that's shorter term. Trends change. We all know that technical trends change. You're riding the moving averages, and then the moving averages collapse. And what we're trying to do this time of year is recognize. Let's do this in a color, right? That somewhere in this period, downward pressure shows up. So you're we're looking at this and thinking, okay, right now the technical trend is up, but maybe there's some selling opportunities coming in the future. Okay. You don't just go in and sell. Right. So, anyways, let's take a look at some of these yen pairs technically. Uh, 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 All right, cool. So what is going on? Yen is right, is weak, but maybe kind of is stabilizing in here. I don't know. Let's go out and look at a bigger point of view. This is overnight stuff. Let's look at longer term trend stuff. Yen is very weak, huh? So what the seasonality is saying is not that this will go up, but that in the July, August, let's say between July and September, very often, okay, a yen goes this way. So if that occurred, where would it happen? Probably down in here, right? So we're trying to look at these charts and say, well, there's time and there's price. So the time in which yen pairs very often, I mean, look, we were looking at seasonality. So we're talking about what usually happens over the last 5 years and what usually happens based on 20 years of analysis. Very often between that August and the 60-day period of the beginning of July to the end of August, there can be, or very often there has been, yen strength. And so that's where we're trying to right? We haven't seen it yet, but maybe it should be on your radar. Okay. So you wouldn't buy yen yet, but you're aware that the yen weakness could go away. Now, this year is different than the last 20 years, right? What's different? What could break the 20-year norm? Well, this unique policy we have at the Bank of Japan called yield curve control. That didn't happen 5 years ago. So it's not in the 5 year norm, right? In the 5 year seasonal average, it's not there. It's not in the 20-year seasonal average. 12 years ago, there wasn't yield curve control policy at the Bank of Japan. It hadn't been invented yet. They've only really been doing it a couple of years, really, right? So maybe this year is different than the last. Okay. So that's why you wouldn't just say, oh, QuantBox says this, boom. No, 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 no. You have to think forward. So right now, if it's falling, let it fall, but then still pay attention that the normal supply and demand or ebb and flow for the Japanese yen tends to change soon. Okay. So you're like, ooh, okay, cool. What else is going on? Okay. Long term Kiwi is quite weak and coming down to the bottom of its, I don't know. I don't know if we want to call that trend. The bigger trend obviously is this way, right? Okay. So interesting. Boop, boop. This would be a double bottom. Okay. So if this changes, it would have to occur like that. But is it going to? Well, you would want to research Kiwi on QuantBox and say, do I want to own this? And then you also want to think like, what's outside of the economic data, like GDP, inflation. Well, where does GDP going up or down or inflation going up or down come from? Well, very often it's, well, if New Zealand is a trade partner or is an exporter. And so the import and export data is really important because their whole economy is based on exporting, right? And it's an island, so they probably have to import a fair amount too, right? So this global trade, who do they trade with and what do they trade? What do they import? What do they export? And that's not in QuantBox, but you have to think forward and say, okay, if they trade a lot with China, what's China going to do? Are they going to buy more stuff from New Zealand this year and next year, or less stuff this year than next year than the past, right? And so you want to pay attention to things like stimulus packages. And it was reported recently that China, well, as you know, it has cut repo rates and short term interest rates and sort of like interest rates that a consumer be would get, and then they lowered interest rates that a business would get, and then they lowered interest rates on repo, which is other kinds of funding. Anyways, they lowered those, and so but it was recently reported that okay, that's good and that's helpful for a slowing Chinese economy, but there's no big stimulus package coming. They're not no helicopter money coming, right? And so that might be what's causing this next wave down for the value of the New Zealand dollar because there isn't going to be free money for Chinese, importers to start buying stuff from New Zealand. And you're like, okay. So, anyways. Aussie down long term, Kiwi down long term, CAD fighting. Now this makes it difficult for CAD, right? Because it's not doing anything, and then all of a sudden, oh, it's like rocket ship time, and then oh, right, it's all over. Um, but notice that it did bounce right where we'd want it. Okay, now this isn't CAD dollar. This all right. This is the Canadian dollar versus everything. So it just happened to bounce at a nice little price. And wouldn't it be great if that stayed strong? Wouldn't that be great? Um, you could see dollar was very weak earlier this year, and then it rallied back, and then it's come down, and now it's stabilizing, which is actually really good. See, I want this to go up. I don't. Well, I don't want it to go up, but I wouldn't be shocked. Excuse me. I wouldn't be shocked if it did go up because I think there's real risk in the economy for a recession or some version of a slowdown. And in that situation, the dollar often goes up. And it's interesting that we had this 618 and we should be pushing lower to a 1382 down. But if instead it makes a higher low, that creates the reversal. That's dollar strength. And I understand why that would be. And again, that would be recession. That would mean stock market down. That would mean Bitcoin down. Okay. That kind of stuff. Okay. So, anywho, a quick look at commodities. We don't really, I haven't covered them often recently. Maybe I should do that more. Would you be interested in an oil page on QuantBox? Like, I know we have oil as an asset, but what about oil as an industry? Rig count, for example, inventories, seasonality of inventories, not just seasonality of price. Oh. And you'd probably want it tied directly into the EIA, right? Maybe some Fed data, because what would, if we created such a page, I don't even know if it's possible. Maybe it's impossible. Um, but if it was possible, how would you, if you could do oil inventories and rig counts, that all just leads to supply, right? Where would you get demand? How could you figure out demand for oil in the future? Put your economist hats on. If you were going to design such a tool, what would you do? How about global GDP? Yeah, that's it. Feed the beast, right? If you work, every factory worker brings lunch, right? You need energy. Excuse me. So, anywho, I don't know because you'd have to get that from the Fed. Mm. But wouldn't it be cool if a page like that exists? Maybe someday, soon. So, anyways, let's take a look at oil. La di da di da 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 da. Down, 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 down. Not long ago, we were talking about this area, and I suggested you need to make a decision right here, right now. Um, are we going from 70 down to 60? Or, are you going to look at this price, which is, it's not 65, but let's just call it support, obviously. Are we going to go from this way? And that's a decision you need to be making now. And for those that are bears, they've already entered. They should be jamming their stop at break even because there's a high likelihood if you're short. So let's say you did short in here. We don't know the future, but if there are bulls, they're probably going to live somewhere in here and then challenge you, right? So you should already be in as a bear. You should be jamming your stop at a bear. Bulls are thinking about stinking about it, and there are opportunities coming maybe quite soon. Okay. So, anywho, anything else? Maybe today we should look a little bit at gold. Okay. And again, if you think the dollar is going to be strong, then gold would be down. Why? Well, you need less dollars to buy the same amount of gold. An ounce of gold is always an ounce of gold. So if the dollar's getting strong, it buys more gold. That's all. So just mechanically, the price comes down. Then you'd have to ask yourself, well, why is everybody hoarding dollars? Right. And that typically happens when the economy is bad. See, when the economy is good and you feel rich, you don't like your dollar, right? Cash is trash, isn't it? What do? You go out and buy some stuff, right? You consume something or you invest it because your money's worthless in the bank, right? So you get rid of your money when you feel good. What happens when you feel bad about the economy? Maybe you're going to have a less income or no income. What are you going to do? Go out and spend it at the bar, buy a giant TV? No, you're freaking out. You're like, man, things can get bad. I might need this money for like survival. Suddenly you're hoarding your dollars. Okay. So that's how you want to think about it. So if the dollar's getting stronger, people are hoarding it. Okay. And so also, if the economy is falling and therefore you're hoarding your dollars and you're not spending your dollars, then prices end up falling because inventories rise and then retailers have to slash prices. Well, falling prices mean disinflation. And if you don't need gold to hedge inflation if inflation's falling. And also, when you're freaking out, if you are really afraid, you're locked in your basement, right? You and you're hungry, you don't eat your gold, right? It tastes terrible. So having some cash that you can convert into carbohydrates is much more useful, right? So, anyways, um, so you want to watch the economy that way. Just out of interest, let's go back to the QB. Where is it? Here it is. Let's do that. Let's look at bonds and commodity and pull up gold. Yeah, neutral now. Very, very strong trend down. Look at retail. Very, very long. Why would retail traders be so long gold? Because they've been told when inflation is high, you buy gold, right? It's not correct. That's not what your grandpa said. By the way, that was your grandpa's strategy, right? So, well, what did grandpa, excuse me, why do people say buy gold when there's high inflation? No, 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 no. Misunderstood. Years and years and years of common sense making no sense at all. You buy gold when inflation is rising, not when you have high inflation. When you have low inflation, that is rising. So this whole period that we've had inflation falling from 10 to 9 to 8 to 7 to 6 to 5 to 4 now in the United States. That's disinflation. You don't hedge disinflation, you let it happen. That's good. Disinflation's good if you're starting from a high inflationary point. So there's no need to own gold when prices are coming down. You don't need to hedge falling prices. You enjoy falling prices, right? So there's just sort of this misunderstanding, in my opinion. And institutional investors are even worse. Okay. Now, institutional investors might be thinking, you know, 10 years, 20 years in advance or 3 years in advance. We know retail doesn't think that long. But nonetheless, I disagree with them all. And I disagree with them all. Okay. I mean, QuantBox isn't wrong. I mean, that's the analysis but when I look at gold, I think through it and I see the falling inflation and you can see this. I have everything set short, everything. And I have been for a long time. Down, up, and look at this is what I drew days ago and up and doop. Yep. So next week, plausibly still down, huh? Kind of interesting. Disinflation. So make sure you break the cycle in your family. Inform them. When you have 2% inflation, but suddenly it's going to 3 and it's going to 4 and you're going to 5 and you're like, it's maybe, misappropriate use of money by the central bank or by the government, and it's driving the value of the dollar down and inflation up through, like I said, usually it's inappropriate spending, increasing the money supply irresponsibly or artificially, right? That kind of stuff. Okay, cool. But the opposite is happening right now. Okay, so make sure you tell your grandkids, and I'm sure they're going to listen. I'm sure they're going to hang on every word. Oh, let me write that down. Okay. Yeah. Hmm. All right. So I think we'll leave it at that. Watch again the yen pairs. It seems that they're lagging. I guess we can cover this just briefly. What the scatter plot showed us was Nikkei is up into this move, okay, which look I've predicted technically. Um, and the yen pairs are not following. So that there, so maybe they follow up. And if they do, we're we're kind of looking at this in the near future. The risk is that the Nikkei went up today and the yens didn't follow. So the next thing that could be informative, I mean, look, the breakout is informative, right? Because we know technically if it's going to break down, this is the right price. We don't know if this is the time it breaks down. Maybe it breaks down 3 weeks from now, 2 weeks, 2 days. We don't know. We don't know the time, but this would be a fantastic price for a breakdown. So I highlighted this days ago. In fact, last week, I think I drew this. So now that we're up here, isn't it interesting information that the yens didn't go with the stock market? And you're like, wait, what do they know that we don't know, right? And they might say, yeah, well, this is what's happening in July. We already know seasonally that that's not shocking. It just hasn't happened yet. But if the Nikkei now drops like a ton of bricks and has a terrible month relative to what it's been doing the last several months, if suddenly that seasonality kicks in and the whole thing comes around to the downside, yeah, you better believe the yens will have this huge repricing. I don't know about that. Maybe that's oversaid, but maybe that will at least produce yen weakness on a different scale. I mean, we've had this amazing yen weakness for quite some time. And all of a sudden, maybe over July or August, maybe it just kind of goes neutral from terribly bearish to like, yeah, and nothing happens for a few weeks. And that's because maybe the Nikkei comes down, maybe the normal ebb and flow of seasonality takes place, but the yen strength that normally comes in this time of year is not enough to truly offset the yield curve control that the central banking is doing, right? So let's say on the normal supply and demand of Japanese yen that always seems to happen this time of year, it occurs. Suddenly there's demand for yen, but at the very same time, the central bank is still weakening the yen. So, instead of maybe yen strength this year, it goes yen neutral. Yeah, I'm talking specifically the yen, right? And that would impact then you'd have to do relative strength of the other asset on the other side of the trade. So if yen is neutral instead of weak, would you buy the pound? Would you buy the Aussie? Or would you prefer euro? Or would you prefer dollar? Okay. And you'd have to make that analysis, right? And remember, QuantBox is only looking at econ, right? Only the economics. It's looking at this economy versus that economy. It's not measuring the market. I mean, it is when you look at seasonality, that's normal market patterns. And it does when because it analyzes technical analysis, right? but generally speaking, it's just looking at the economy. So it'll tell you the British pound economy is terrible. That is true. QuantBox is going to give it a negative score. It's a horrible economy. But pound might be going up because interest rates are expected to be going up for the next year, year and a half. And somewhere this year, the United States is going to pause. That's a difference that you're going to have to look at. And I have some tools coming, maybe, that might be able to help you make that decision too, and not just rely on the bias, because the bias is just based on the economics. It's not based on market. The market is how traders and investors are putting money to work to make a profit. So they're thinking 6 months in advance. QuantBox is just telling you what it is. It's a snapshot. It's like for a corporation, what's the balance sheet today? It's not looking at cash, expected future cash flows and discounting, like it's not doing that, right? So it's economics, not finance. And so our job as traders is to look at the economic data and then interpret the market psychology, which is much more of a finance, or in particular, behavioral finance issue. So, anyways, that's why I'm here every day. If you have questions about that, how do we look forward? Ask me, and I will do my best to address that. And more importantly, um, find ways to present that data on QuantBox. So, anyways, this was QuantBox Live. I hope you have a wonderful Wednesday. The stock market's going to open in about 2.5 hours. So, you're already ahead of the curve. So, peace on earth. May the pips be with you. May your profits be above average. Cheers.